Hey everyone, welcome back to Corporate Decoder, the place where we try to make sense of the wild world of corporate finance, and boy, oh boy do we have a treat for you today because Goldman Sachs Private Credit Corp is giving us a peek behind the curtain, and let's just say things got a little interesting. Before we dive in, if you are finding value in these deep dives into corporate filings, make sure you are subscribed to the channel. And hey, if you want to chat more about these companies and connect with other finance enthusiasts, join our Discord community, linked in the description below. Alright, so what we're re-looking at is a Form 8K from Goldman Sachs Private Credit Corp. Think of this as a current report that companies have to file when something significant happens. It is like a headline alert for investors and the public. Now, one of the most interesting parts of this filing is that on the 1st of September of 2025, Goldman Sachs Private Credit Corp sold a bunch of their Class I shares. This wasn't something they advertised heavily on the stock market. Instead, it was a private sale, meaning they didn't have to go through the usual registration process with the Securities and Exchange Commission, or SEC. They did this by using exemptions like Section 4(a)(2) of the Securities Act, which is basically for private deals, and Regulation D and Regulation S, which are for deals with specific types of investors or in specific regions. And get this, they sold over 11.9 million shares as of that date, with the final number being confirmed on the 29th of September. This brought in a hefty sum of over $298 million. That is a pretty big chunk of change. They made sure to mention that the buyers represented they were accredited investors, meaning they have a certain level of income or net worth, or were non-US persons, so they were following the rules for these kinds of private placements. Moving on to something a bit more regular, we got the August 2025 distribution details. This is essentially the payout the company is giving to its shareholders for the month of August. For their Class I shares, they declared a distribution of 19 cents per S-share. Now, that might not sound like a lot on its own, but when you annualize it, it is a yield of over 9%. That is a pretty decent return on cash if you are holding these shares. This distribution, which was declared on the 6th of August, is expected to be paid out around the 6th of October to shareholders who own the stock at the end of August. And for those who want to keep investing, they have the option to reinvest this distribution back into buying more shares. Now let's talk about how the company is actually performing. This section gives us the estimated total return based on their net asset value, or NAV. Keep in mind this is a measure of the company's underlying assets minus its liabilities. Looking at the Class I shares, they've seen a pretty steady climb. In the last month reported, they had a total return of 0.6%. Over 3 months, it is up to 2.2%, and year to date, it is a healthy 5.5%. If you look back over the whole year, the return is 8.8%, and since the company started operations in April of 2023, the total return has been an impressive 10.2%. This shows consistent growth, which is always a good sign for investors. This next part is crucial for understanding the company S value. As of the 31st of August 2025, Goldman Sachs Private Credit Corp. Its entire net asset value was about $7.7 billion. That is a massive amount. And for their Class I shares specifically, the net asset value per S-share was $25.04. This tells us the real value of each share based on the company S assets. They also report their fund leverage. As of the 31st of August 2025, their fund leverage was 0.4 times. This means for every dollar of assets they have, they are borrowing 40 cents. This is a relatively modest level of leverage. Companies often use borrowed money to boost their returns. A higher leverage ratio means more risk, but potentially higher rewards. A 0.4x ratio suggests they are managing their risk quite carefully, which is wise in the credit space. So, wrapping it all up, Goldman Sachs Private Credit Corp is a company that is actively managing its capital, evidenced by that big private sale of shares and the consistent distributions to its shareholders. The returns are solid and the net asset value is substantial. Their leverage is well controlled, suggesting a prudent approach to growth. What really stands out here is the company's ability to generate consistent returns and attract significant capital through private placements. The 10.2% inception to date total return is quite strong, especially in the current economic environment. The 0.4x leverage ratio shows they are not taking on excessive risk, which is a positive for stability. However, it is always important to remember that past performance does guarantee future results. The credit market can be volatile, and while this report shows a healthy picture as of August 2025, unforeseen economic shifts could impact future returns. In conclusion, Goldman Sachs Private Credit Corp appears to be a well-managed entity with a clear strategy for growth and shareholder returns. The private placement shows a strong demand for their shares from sophisticated investors, and the company is rewarding its existing shareholders with steady distributions. Alright, that is our breakdown of Goldman Sachs Private Credit Corp's latest filing. What do you think about their private placement strategy and their consistent returns? Let us know your thoughts in the comments below. If you found this analysis helpful, please hit that like button and subscribe for more deep dives into the world of corporate finance. And don't forget to check out our Discord channel for more discussions. Thanks for watching, and we LL see you in the next video.